Good morning, everyone. I, Dr. Maya Joshi, on behalf of Faculty of Commerce, welcome Mitesh Jain, sir, Director of Price Waterhouse and Co. LLP, and welcome to all present here. Mitesh Jain, sir, is Chartered Accountant and Company Secretary. Gujarat Law Society was established in the year 1927, promoted by luminary Sardar Vallabhbhai Patel, Iron Man of India, Shri Ganesh Mavlankar, the first Speaker of the Lok Sabha, and Shri I. M. Nanavati, with the vision of excellence in education. Since its inception, GLS took a pioneering role by offering programs in several disciplines such as business management, computer technology, commerce, business administration, education, law, and humanities, etc. GLS Faculty of Commerce has been conducting excellent workshops, seminars, and webinars throughout the year. Our today's speaker of this webinar, Mitesh Jain, is the Director of Price Waterhouse and Co. LLP and is a part of indirect tax practice in Ahmedabad. He is a Chartered Accountant and Company Secretary. Mr. Mitesh Jain holds more than 11 years of experience in indirect taxation, and he regularly speaks on indirect tax matters at various seminars, sessions, conferences organized by trade bodies and educational institutes. The topic of our today's webinar is on to understand GLS and why, to understand GST and why it is called biggest tax reform after independence. I would like to request Director Dr. Avni Shah ma'am to welcome Mitesh Jain sir.
Good morning, everyone. On behalf of GLS University and GLS Faculty of Commerce, I, Dr. Avni Shah, Director GLSIC, welcome Chartered Accountant Mitesh Jain, Director and Indirect Tax Expert in PwC at GLS University. Knowledge in every form is an asset which we disseminate among our students to enhance their vision and perception. Accounts and Commerce is a wide platform where we at GLSIC make sure that our students not only receive best academic treatment but also gain the added knowledge of their field. To serve this purpose, we invite eminent speakers from various fields who not only add knowledge to our subjects but also help to bridge the gap between the theoretical knowledge and its applications. Today's topic, GST, the biggest tax reform and its application on common man, is one of the most intriguing subjects, and not only from academic perception but also from the market review. Introducing GST has brought several changes into the economic setup of the country, which needs to be understood and analyzed. I am really thankful and very glad to see a Chartered Accountant Mitesh Jain, who readily accepted our invitation and who will enhance our students' knowledge on the above said subject. I once again thank Shri Mitesh Jain and welcome him to GLS University. Thank you all.
Hello students, good morning. My name is Mitesh Jain, and first of all thank you Professor Avni, thank you Professor Maya and the whole GLS team for giving me this opportunity to speak on one of the, I would not say biggest, but I would say very interesting tax reform that have been introduced in India. It has been a mammoth task for the government as well to get the consensus of so many states, because the taxes which were there under indirect taxes earlier were so much so that to consolidate them and get a one tax reform and implement it and monitor it rigorously, change it, is not a small task. So in today's session, I'm gonna take what culminated into GST, what are the basic concepts of GST. I'm sure you have read about GST a lot in 4.5 years of journey of GST, but I'll try and give some different perspective how it has changed lives, how it has changed lives of the taxpayers, and how the compliance is being implemented or introduced in India. So let's begin with the first and foremost thing. Very interesting to note that there were around 17 different taxes which were being levied by the government to garner revenue. Now that all those 17 taxes have been merged, have been consolidated, and have been changed to GST. So what were those taxes? For your understanding and knowledge, there was taxes on customs, additional duty of customs, special additional duty of customs, which have been replaced to IGST now, central excise duty, a tax on manufacturing, and today we don't have tax on manufacturing at all, barring few products where excise duty is still applicable, service tax, taxes on services, CST, central sales tax, for any sale of goods from one state to another. CST was applicable. Now it is not there. There are various surcharges, cesses on goods and services. On state sides, VAT, value added tax, was there. And if you ask me, this is not only one value added tax. I am talking about 25 plus states and other union territories having their own value added tax in their own unique shape and form. All those VAT laws have been made applicable only to few products, which I will cover in the next part of my presentation. Other taxes like luxury tax, octroi, entry tax. So in nutshell, if you ask me whether it was an easy task, no. I think so. The journey started in late 2010, and GST got implemented in 2017. So it said that almost it took a decade to convince so many state governments, to convince so many people in the whole government to get to a tax reform like GST. Now, while I can speak about the benefits of GST, but I thought let me first let us go through what is changed and how GST has been implemented. It's a simple, if you ask, it's a simple tax reform wherein if a company one, so in this example, company one is in state A, let's say in Gujarat, and it wants to procure any goods or services. So if the company is procuring goods from Maharashtra, then it is called as interstate purchase. And in this example, 50 rupees of interstate purchase and 18 rupees of tax of GST would culminate into 9 rupees of tax. Similarly, if there is a local purchase, then on 50 rupees of local purchase, SGST and CGST is applicable. Again, the 18% remains the same, but it gets bifurcated into central goods and service tax and state goods and service tax, 4.5 and 4.5. GST is a value added tax, and now I'm sure you must have read about it. It value-added tax means what? You have to pay taxes only on the value addition. So if company A has procured goods worth of 100 rupees and paid already 18 rupees of tax on those goods, then whatever is the sale of company on that tax has to be paid. So let's say if company 1 is doing interstate sale of those goods after doing some value addition at 125. So because it's an interstate transaction, IGST would be applicable at the rate of 18%. Now 125 into 18 comes to 22.5. How does company 1 pays 22.5 is mentioned on the left side of the presentation. 22.5 is paid through the taxes, the credits which are already available, input IGST, input CGST and input SGST. So 22.5 minus 18, 4.5 is the net tax payable. Net tax payable is nothing but the value addition. So if you see from 100 to 125, 25 rupees of value addition is there. On 25, if you count 18, it will come to 4.5. So cash payment of 4.5 has to be done. Similarly, let's say company 2, who is the recipient of those goods, has done some more value addition and has supplied those goods to one from 125 to 150. Now, because the supply is within the same state, let's say Maharashtra, then on 150, CGST and SGST would be applicable, which will come to 13.5 and 13.5. So now how does that 13.5 and 13.5 is paid is mentioned on the right side of the presentation. Output GST of 13.5 is you paid through input IGST of 13.5. SGST 13.5 is paid balance out of 22.5 credit. 13.5 is utilized against CGST, balance 9 rupees is utilized against SGST, and SGST is to be paid in cash, which is balance 4.5. Again, the value addition is 25 and hence on 25, 18% tax is to be paid. Now, why I am showing this example? The example, you could see that there is a seamless taxation regime wherein company 1 is able to supply goods to company 2 from one state to another, and there is no tax leakage, and that's what we call as cascading effect of tax. So one of the important change or the benefit that GST brought in was cascading effect. Cascading, I'll give you example how it used to happen earlier. So if I'm a manufacturer and I have manufactured goods of worth 100, then I had to pay excise duty on the manufacture, which was, let's say, 12.5. So 100 plus 12.5, 112.5. On 112.5, I used to pay 2% of CST if I am supplying goods to someone in Maharashtra. From Gujarat to Maharashtra, CST was applicable. Or if I am supplying to someone who is an end consumer, so 15% of CST would have been applicable. That 15% or 2% was applicable on 112.5. So tax on tax was there. And credits of excise duty was not available against the CST or VAT tax liability. So that's one of the important challenge which was there, and there was the tax was becoming a cost. Now indirect tax, you are aware that is a tax which has to be borne by the end consumer, and there should not be cost in the supply chain. So cascading of effect is removed. Higher collections of revenue. If you will see the after implementation of GST, the collections have increased. That is because of lot of new registrations have happened. Wider taxpayer plus the tax rates, the way they have been changed, government has been able to garner more revenue. Ease of doing business, I'll come to that in the later part of the presentation, but you can understand or imagine a situation of a taxpayer who has to deal with excise, service tax, VAT, three different laws, um, and comply with those laws is not an easy task. Plus, there if someone is registered in various states, so many FMCG pharma companies have registration across India in various states, then you have to deal with VAT laws of all those states as well. Now, instead of all those laws, one has to refer to GST and comply with GST. So one is that law. Second is the rates of taxes. I'll give you an example. Mobile phone. Let's say if you go to a Chroma store in Ahmedabad to get a mobile, I'm talking about 2016. The rate of tax that would have been levied by Chroma would have been 15%. 15% Gujarat VAT. If the same Chroma store you go, Chroma brand you go to in Bangalore, the rate of tax was around 13.5. If you go to Maharashtra, same Chroma store, it was 12.5. Now, so you are buying a commodity, which is a mobile phone. Mobile phone remains the same, but taxes paid across India were different. Now, because that there is implementation of GST, the mobile phone attracts 18% of GST across India, wherever you go. So there is no distortion on the prices of products or goods because of the taxes. Actually, tax has to be simpler, right? And so on the tax rate structure, it's truly one nation, one tax that has been introduced in India because of GST. And third is compliance. Now, if Chroma has registrations across India in various states, they have to understand the law and do the compliance, and every state had different returns. So Gujarat had GST 201, Maharashtra had different returns, Karnataka had different returns. So every state had their own returns, their own compliances. Now, instead of that, a single GST law, which needs to be referred to, which needs to be implemented, and which needs to be complied with, makes the life much more easier than it was earlier. I'm not saying that there are no challenges. There are, yes. However, those challenges are not there which were there earlier. Digitalization of registration compliances. I still remember in few states, even before GST was implemented, the compliance was manual. You had to go and physically submit the return or get the forms, C form, F form, which has been nowhere now. I mean, everything is online. Uniform rates, I have also already discussed about the rates throughout the country. Coordination with single authority. So, if I was the manufacturer in Gujarat, I had to comply with the excise. So, excise authorities were different. I had to comply with service tax. Service tax authorities were different. I had to comply with VAT. VAT authorities were different. Now, what is the scheme? The scheme is that administration of one SSC would be by only one authority. So either it would be state government or central government. So they have decided, and there is some formula, 50-50 formula, which has been decided for all new registrations. It is 50-50, and for old registration also there was some formula. In nutshell, one authority you have to report. The authority can check or do assess your returns or whatever submissions you have done. So it becomes much more easier and simpler for you to defend yourself if it is only one authority which comes to your door. So these are the benefits, and these are the things which led to this being called or termed as biggest tax reform. You know, India being a federal structure economy wherein various states have all the states, not various states, have all the powers to manage their resources and collect taxes. To get them on board for this kind of reform is not an easy task. So for you must be aware that, for your understanding, majority of the goods and services are in GST, almost all, but there are a few still out of GST, which are petroleum products, crude oil, petrol, diesel, natural gas, ATF, and we are hoping that those will also get consolidated into GST one day in some time. So you can imagine all the products which were there in under before goods and services are now in GST, except few. To get all those states agree to such a big thing is not a simple task. So that's why it's called biggest an historic tax reform, which has onboarded so many states to it across India. Now, moving to basics of GST. Now, I'm sure you have already had understood what GST has been, but let's see what are the rates. 0%, 5%. These are the broad rates: 5%, 12, 18, and 28. So if you ask me what were the rates earlier, the rates were very wide. Like if you had, as I said, mobile phone, excise was 6 or 12%, and VAT was 15%. That would have reached around 27%, 20 to 27%. Now it is 18%. So to larger extent, if I say it, the rates have been rationalized. The burden of taxes has been rationalized in a significant way. So why the different rates? You must have heard our earlier Honorable Finance Minister saying that slippers and cars cannot have same rates, and India is a very diverse economy, and hence there are various rates. 5% for essential items for mass consumption, essential commodities like ghee is there. 0% for fruits, vegetables, milk. 12% for pharmaceutical products. So all majority of the medicines that you see are in 12%. 18% is the peak rate, which is the standard rate we call. Majority of the products are in 18% rate of tax, and 28% for luxury items and sin goods, and it's one more aspect is motor vehicles. Motor vehicles attract compensation cess as well, so it ranges from 1% to 22%. So if you buy a petrol car, 28% of GST plus 1% of cess is applicable. Diesel car of some specification, 3% is applicable, like that. So it's a progressive taxation regime wherein government has thought through, based on the basic necessities and important items, they have kept it at a lower rate, and they moved up based on the significance of the products in the life of common man. And it is a thought process, and if it happens, it's very good that the rates should get merged, and the slabs which are there, 5 slabs, well, there are others as well. Jewelry has different slab, diamonds have this different slab rate, but these are major ones which cover 90%, more than 90% of the products, 95% of the products are covered in these rates. So there are thought process going on that 5 and 12 can be merged, or 12 and 18 can be merged, to get a simplified structure where are only 3 rates, either 0, 1 consolidated rate, and then 28% or whatever rate it is. If that comes up, very good. It will make the classification challenges more easy and easy to solve in terms of getting rates of the products which are goods or services which are to be supplied. Coming to mechanism, see, all goods and services are there under GST. Who has to pay? So there are uh, thresholds being defined by government, and you must be aware that 20 lakh and 40 lakh are the thresholds of GST. So only those people who are above that threshold needs to register and make the payment of tax. Where, now what and who you are aware, where is very important. GST is a destination based consumption tax. When I say destination based consumption tax, means the tax has to be collected and paid to the state where the goods or services are consumed. So that's also one thing which has been brought in, simplified in GST, in terms of earlier excise was there on manufacturing, CST was interstate. Now it's easy to understand that the state where goods are consumed should get the revenue of the goods and services which are consumed. So what is destination based consumption tax? And it was the major or important aspect of GST, that how do you distribute the revenue across India, which has so many states. So from that perspective, government has introduced place of supply provisions, which primarily talks about what is the place of supply of goods or services, and wherever the place of supply of goods or services is there, that state would get the revenue. So let's say if you are supplying goods from Gujarat to Maharashtra, then Gujarat will not get any revenue. It will be Maharashtra who will get revenue, because the person who is sitting in Gujarat will charge IGST and will show that place of supply is Maharashtra. Similarly, in case of services and goods, it is even simpler to identify where they are moving and where the consumption is happening. But in case of services, it becomes very difficult at times, because services are intangible and you can't, they are not in, there is no physical form. So where the service is supplied, so there are rules like, if an event is organized, wherever the event is organized, the services would be considered as provided. In case of let's say construction of immobile property, then wherever the immobile property is constructed, at that place the services are provided. Likewise, there are, say, let's say job work. If you are doing a job work or you are doing processing of any goods or services, then wherever the performance has happened, then the place of supply is that. If you ask me, the major challenge which remains today also is to determine, in case of services, to determine where exactly the place of supply is. When to pay the tax? Earliest of the following dates, that is invoice. Let's say if I have manufactured those goods and supplied today after issuing invoice, then the date of the invoice is the time when tax triggers. Or payment by supplier. In case I get an advance for any services, then also I have to pay the tax at the time when I have received the money, in case of services. How much? That's again an interesting aspect. While generally it is understood that whatever amount you pay for the goods and services on that tax has to be made applicable, but there are at times transactions which are between related parties, or which are without consideration. Then how do you value those goods or services and pay the tax becomes important. So I'll give broad perspective. Government has said that if there is no consideration, or if it is between related party, then the open market value should be the transaction value. So if I'm a related person, I'm supplying to my, let's say, my sister, then because my sister is related, I would try and undervalue uh, the goods or services and pay less tax. So instead of paying tax on the value which I determine, government has said that if the person was not a related person, I was giving to an unrelated party, how much I would have charged, on that tax has to be paid. So let's take a mobile phone where the value of mobile phone is 50,000, but because I'm giving to a related person, I'm charging 30,000. So the rule says that if you would have supplied those goods to a unrelated person, what would have been your price? It would have been 50,000. So even if I'm charging 30,000 to a related party, I have to pay tax on 50,000. So that's the valuation mechanism. What all is considered as supply? Why it is important? I will bifurcate it into I have bifurcated into 4 parts. All forms of supply, whether those are sale, transfer, barter, even if you are exchanging something, you say that you take my watch and I'll take your phone, there is no consideration involved, right? Then when one would say that tax is not applicable at all, it's not the case. You have to value the mobile phone and pay tax on that. You have to value the watch, the price of watch, and pay the tax on that as well. So both transactions would apply, would attract tax. So that's that's something which is getting covered. So it's very wide definition. You see, everything is covered, and this definition talks about if there is a consideration, whether it is in form of kind or in form of monetary consideration. Other aspect is on, there is a schedule which has been included, which says that even if it is transaction is without consideration. So like I said, I am giving something to my related party and I don't charge. Okay, then whether tax is not to be paid? No. The without consideration transaction is driven by the relationship that you have, and hence that is actually evading the tax. So in terms of related party transaction, government has said that you have to have taxation on that. Now, very interesting point, and this has been something which was not there earlier. So let's say I'm a company where I'm operating, whereby I'm operating in 4 or 5 states: Gujarat, Maharashtra, Rajasthan, Madhya Pradesh, Karnataka. I stock transfer those goods from Gujarat to Maharashtra to my own registration. Then also taxes to be paid. Why? Because as per GST, if you supply goods to your own registration, so in GST, every state you have to take different registration, separate registration. So in the eyes of GST, if you have 5 registration under one PAN, one permanent account number, one company, under one PAN you have 5 registration. Those are 5 distinct person, 5 separate legal person as per the GST. So if Gujarat supplies to Maharashtra, it would be considered as a supply. And even if there is no consideration, I mean, actually, if one company want to transfer those goods for sale in Maharashtra, there is no consideration, right? Company would not pay from its own one pocket to the other pocket of itself. So from that perspective, it becomes very relevant, important to see and understand that transactions across states within one company would also attract tax, whether or not they are with consideration. Similarly, there are transactions which are outside of GST and which are also important. One is salary. Employer-employee relationship is outside of GST. So whenever employee performs services for an employer and in turn gets salary, it is actually a service, if you ask me. But because it is there in specific schedule which deems few services or few goods to not to be a supply, there is no tax on that. Similarly, sale of land, sale of building, sale of land is covered under different lists of our constitution, and on that stamp duty is applicable. Sale of building is an immovable property, again not applicable, GST is not applicable. So there are various transactions which are kept outside of GST, and those are also very important to note. Coming to the last part of the presentation, now you have read about GST, you have heard about GST. You go to a let's say a restaurant and see that invoice has 5% of GST, 2.5% of CGST, 2.5% of SGST. If you go to a hotel, a big restaurant with a hotel, a big hotel, 5-star hotel, let's say, then the rate of GST over there is 18%. Now, there are various rates of GST. What is very important for the government is to be fair and equitable, and also being able to monitor that everyone is paying GST who is liable to make the payment of GST. Like you say, if there are 100 students in a batch and one is allowed to copy in an exam, then it is unfair for other 99, right? So there is some vigilance put in place. So similarly, to monitor, administer GST, there are various compliances which are put in place and which are very unique compliance. I thought maybe there are compliances which students may not be aware of, but as I said, it is very important for the government to be fair and have an administration which helps government to garner the right revenue that they are expecting, plus enforce the law in such a way that people automatically make the payment of tax, or people automatically comply, because government cannot spend, let's say if I have to earn a rupee and I spend 50 paisa to earn that rupee, then if government spends that much of amount in garnering, getting the revenue, then the tax itself would be considered as very costly affair for the government. So with limited set of administrative people, government has to get so much of revenue, and if you ask me, the last month's collections were 1,40,000 crore of GST, January 2022. Okay, so what are the compliances which are unique to GST and which are actually defining a different defining digitalization, defining the kind of technology government has also implemented, so that people are able to comply with also, and government is also at the same time is able to catch hold of people who are trying to evade taxes. So first is e-invoicing. I'm not sure whether you would be aware, but e-invoicing has been implemented since last 1.5 year. 1st October 2020 it was first implemented. What does e-invoicing mean? And for a person like a taxpayer, what it would be, what it would require to make the compliance with e-invoicing? So before I get to e-invoicing, I'll talk about what happened. So when GST was implemented in 1st July 2017, e-invoicing was not there, e-way bill was not there, and across India almost all checkposts across borders were dismantled, and government had a steep target of a psychological target of collecting more than 1 lakh crore of revenue every month, but revenues are not that significant. So there were government got to know that people are not making payment of tax, people are adopting a few techniques which are which leads to tax evasion. So government introduced e-way bill. So e-way bill is whenever any movement of goods happen from, let's say, from Ahmedabad to Baroda, then you have to generate e-way bill. So this e-way bill was introduced around 2018, and for all the movement of goods, there is a requirement for one to generate e-way bill and comply with. So government knows beforehand that these are the goods which are getting supplied from one place to another, and if someone doesn't have e-way bill and goods are moving, then government officers can check on the way, ask for the compliance. If not done, can levy penalty. So that was one way of curbing tax evasion. However, still there were instances where people were evading taxes. So government introduced e-invoicing. E-invoicing, as I said, is introduced since 1st October 2020. What does e-invoicing mean? E-invoicing is essentially reporting every invoice to the government on a real-time basis, and whenever the invoice details are reported to government gives back a unique IRN, invoice reference number, and a QR code. So as per the e-invoicing provisions, one has to report all the data on a real-time basis, get the IRN and QR code, and put that IRN and QR code on the invoice. So now you can imagine that all those people who are supposed to do this compliance are reporting on real-time basis. So government actually has data on real-time basis that what is the level of activity happening in India. Level of activity to the extent of how much is the sale, how much or what all products and services are getting supplied, everything. And this is made applicable for taxpayers who are having more than 50 crore worth of turnover. So all those above 50 crore turnover are supposed to do this. Now, after invoicing has been introduced, we have seen significant steady increase in the revenue that government has earned. So now, in fact, there are various countries also who are evaluating how they can implement e-invoicing, because based on e-invoicing statistics, they see a lot of scope and improvement in the tax collections. Other is B2C QR code. So this is applicable right now for 500 crore plus companies only, but still interesting to note. So as you must be aware that the payment through UPI and digital payments in India have increased significantly. So what government intends is that if you go, let's say, to an ice cream shop, and they give you the bill, and in that, if there's a QR code, and if you scan the QR code, you can make the payment directly from that QR code. The recipient, the supplier of ice cream gets the money directly in the bank account, and you don't have to make the payment in cash. Now, looks very easy, right? But the intention, what is the intention? Intention is that today, when you go to a mithai shop or ice cream shop, you don't even know whether the tax that you are paying to that ice cream shop or a mithai wala is paid to the government or whether whatever he is collecting or she is collecting from you, and let's say it has some tax component, but it is reported or not. And that's the parallel economy which government wants to curb, which government believes that if it will be implemented for majority of the transactions, and if you will start making the payment digitally, then no one would be able to hide the income that they have earned. So that's again one novel idea that government has introduced. E-way bill I spoke about. Vendor reconciliation. Now, while the outside world or no, common man would not know, but GST hinges on the input credits. If it is a value added tax, as I shown in the example, it is very important for one to take right credits, input tax credit. Okay. Now, there were other challenges that government faced, wherein let's say I have procured something from X, and I do value addition and I supply to Y. Then naturally what I will do is I will take credit of whatever X has collected from me, and I will pay the tax only on the value addition that I do in cash. Now, government was grappling with one question and one pertinent problem, wherein people were not making the payment of tax. So, X from whom I have collected, he has not made the payment of tax. But I have in all bona fide belief that he would have paid the tax. I have taken the credit and I have done the transaction. Now, I am talking about lakhs and crores of credit which is getting availed, and then government gets only the taxation on the value addition. But what about the X who has never paid the tax? So government has introduced, and it is very interesting to note that government gives you a statement which has all the vendor reports. So if I am doing business with 10 vendors, let's say in January month I got 10 invoices from each of the vendor, and I intend to take 1 crore worth of credit from all the vendors who have done business with me. I take the credit, and whatever tax payment I have on my output side, I will, based on the adjustment of credit, I make the payment. But let's say out of those 10 vendors, 2 vendors have not made the payment of tax, or not reported at all that they have supplied to Mitesh. So there is a statement which government is giving, GSTR 2B, wherein they show, the system shows that which all vendors have reported the transactions that have been done with me. And if there is only 8 vendors whose transaction appear over there, then I am eligible to credit only to the extent of those 8 vendors, not 10. So vendor reconciliation, we call it vendor reconciliation, but vendor compliance has become a very big challenge in today's world. And from what you understood till now, whatever I said, if credits are not available to any of the taxpayer, then it's a working capital issue. I mean, if I don't get the credit of any vendor, then I have to make the payment of the taxes from my own pocket. So the reconciliation has become very important, and the taxpayers, the companies or individuals are supposed to do this on a monthly basis so as to take the credit. And this what all this dovetails into is that government is putting in place mechanisms, checks and balances, so that people don't escape from the whole tax net and take advantage of any of the loopholes or try to take advantage of anomalies in the system to get out of the net. So these are the major compliances that or administratively unique things which government has implemented. And I would say, in fact, government started the trust based mechanism wherein everything was available as a credit and everything was smooth. But now, because there have been cases, like recently it was reported that more than 30,000 crore worth of transactions, I would say fake invoicing or wrong credit, have been undertaken in India, and that all those instances have led to this level um, where there is a compliance that has to be done. And all this is possible now today because of the technological advancement that people have. So e-invoicing, e-way bill, this vendor reconciliation, all that is driven through technology, and uh, that technology shift that has happened in last 4.5 years because of GST is tremendous. And the kind of data that taxpayers and government has significantly increased on a real time basis. So in nutshell, I would say that I'll go back to that slide which talks about the benefits of GST. In nutshell, I would say that one nation, one tax that we call has brought in various benefits and to the whole fraternity in terms of the taxpayers and the government, and I think so it is just it's just the beginning, and in times to come we'll see many more changes. See, 4.5 years of journey also has been so interesting that in years to come it will make hopefully the life easier for taxpayers from compliance perspective, for common man from taxation, lower rate of tax, because it's also important to have a balanced rate of tax, and for the government to reach to that level where government can say that yes, we are fair, and there is transparency, and there is equitable administration and tax payment by the taxpayers. So that's it from my side. We have do we have any questions? I see a lot of good mornings. Thank you. Okay. I don't think so anyone has any question. That means there I see there are two things. Either you have understood everything or I was a bouncer. I'll take it as first one, and I would say thank you so much for attending this session. It was my pleasure to have this, and anytime in future uh, GLS University wants me to be present, I will be happy to do that. Thank you.
I, Dr. Maya Joshi, express my gratitude towards Mitesh Jain sir. We are grateful to you, sir, for accepting our invitation and providing such outstanding speech on the topic of to understand GST and why it is called the biggest tax reform after independence. I express my gratitude towards respected Shri Sudhir Nanavati sir, President, GLS University, for his continuous blessings and inspiration. I also thank GLS management, Director Dr. Avni Shah ma'am, for their constant motivation. I also thank the technical support team, teaching and non-teaching staff. I also thank students of GLS University. Thank you.